Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're really digging into ServiceNow's Q2 2025 earnings call. Our goal here isn't just, running through the numbers. It's about understanding the why behind their performance, which was pretty stellar, and figuring out what's next for them.
Exactly. Earnings calls, especially for a major player like ServiceNow in enterprise tech, they give you this direct window into their strategy, how healthy the business is, and how they see the market. And this quarter, wow, AI was just front and center. It's clearly moved way beyond buzzword status for them.
Right. So for you listening, our mission today is to get you fully up to speed on where ServiceNow stands right now, how their AI strategy is actually playing out and delivering, it seems, and what all this means for, well, enterprise software and business transformation generally. We'll unpack the financials, which were genuinely impressive. We'll look at the AI impact, which seems to be accelerating. We'll dive into their CRM plans, which sound pretty radical, touch on strategic investments, and maybe look at the cultural drivers behind it all.
It's going to be quite a ride. They're definitely not just riding the AI wave. They seem intent on shaping it.
Great.
A quarter of outstanding performance. The numbers speak.
Okay, let's jump right in. ServiceNow's Q2 results. They were, frankly, outstanding. They called it elite-level execution themselves, and, well, the numbers seem to back that up. So the big question is, what made this quarter so exceptional?
Well, you look at the core financials, and they really paint a picture of sustained momentum. And importantly, beating their own forecasts consistently. Let's start with subscription revenue. That's the key metric for a SaaS company, right? They hit $3.113 billion, which is a big number, obviously, but it's the growth 21.5% year over year in constant currency.
And that was ahead of their guidance.
Yeah, a full 2 percentage points above their own guidance. That's significant.
It maybe quickly remind us, constant currency, why is that the figure to watch?
Right. So constant currency just pulls out the effects of, fluctuating global exchange rates. It gives you a clearer view of the actual underlying business performance without the noise from currency swings. It's the operational reality, basically.
Got it. So strong revenue growth. What about indicators for future revenue?
That's where CRPO comes in. Current remaining performance obligations. It's basically the booked revenue they expect to recognize over the next year, a key forward-looking metric. And here again, 21.5% constant currency growth, also 2 points above their guidance. So it tells you future bookings are strong, the pipeline looks healthy, sales are executing well. They're not just meeting targets, they keep surpassing them.
Okay, top line looks great, future indicators look great. What about the bottom line? Profitability. Sometimes you see companies sacrifice margins for growth.
Not here, it seems. Their profitability was equally impressive. Operating margin hit 29.5%. That was over 2.5 points above their guidance, so strong beat there too.
Yeah.
And free cash flow margin was 16.5%, which is up 3% year over year. These margins really show strong operational efficiency. They're growing fast, but they're doing it profitably, managing costs well, even while they invest. That's a powerful combo.
Definitely. It's not just growth at any cost.
Yeah.
Okay, beyond the headline financials, you mentioned qualitative indicators, the big deals, for instance. 89 deals over $1 million in net new ACV.
Yeah, and 11 of those were even bigger, over $5 million. That tells you a lot about customer confidence. But it's not just the number of big deals, it's the nature of them. They emphasize that all of their top 20 deals in Q2 included 5 or more products.
5 or more. So customers aren't just buying one thing, they're buying into the whole platform idea.
Exactly. It's cross-functional adoption. They're not seeing ServiceNow as just an IT tool anymore, but as an enterprise-wide platform. This platform approach helps customers simplify things, consolidate vendors, use common data, which, ultimately unlocks more value.
Can you break down where that strength was coming from? Which parts of the business?
Sure. The breakdown by workflow shows broad strength. Technology workflows, think ITSM, ITOM, security, risk they led with 40 deals over $1 million. That's still their core strength, clearly. But importantly, CRM and industry workflows had 17 deals over $1 million. That shows real traction in customer-facing areas and vertical solutions. They're expanding beyond IT. And core business workflows, things like HR, finance, procurement, they were part of 16 of the top 20 deals, with 7 over $1 million. It really underscores that platform adoption across the whole company.
And that breadth seems reflected in the industry performance, too. Some of those numbers were huge. Transportation and logistics over 100% growth.
Incredible, right? And tech, media, telecom over 70%, retail and hospitality, energy and utilities both over 50%. It shows the platform resonates across very different sectors. And you add that 98% renewal rate on
Yeah,
top.
98% is huge. That screams customer satisfaction and lock-in, doesn't it?
Absolutely. It means customers aren't just staying, they're seeing ongoing value. And it's not just retention, it's expansion within those customers. They now have 528 customers spending over $5 million a year with them. That's a big jump. And maybe even more telling, the number spending over $20 million grew by over 30% year over year. That shows they're successfully moving from vendor to, like, strategic partner status.
So they land and expand very effectively. What about new customers? Are they still bringing in significant new business?
Definitely. Their strategy seems to be about landing the right new logos ones ready for a bigger commitment. They closed 11 deals over $1 million net new ACV with brand new customers in Q2. And here's the kicker. The average ACV for those new logos was up over 100% year over year.
Wow. So new customers are starting bigger right out of the gate.
Exactly. They're attracting clients ready for a substantial multi-product investment from day one. That's a really strong sign for future growth. Two, the AI revolution, driving ServiceNow's growth engine.
Okay, so the performance is clearly outstanding across the board. But what's really driving this, it feels like we have to talk about AI, data, and workflows. It seems like AI isn't just, a feature they bolted on. It's becoming core to their business and what they offer customers.
That's absolutely spot on. AI adoption isn't peripheral anymore, it's central. Look at Now Assist, their AI suite. The net new ACV from Now Assist keeps beating expectations quarter after quarter. Demand is clearly strong and sustained. And their AI Pro Plus products, these embed AI into core things like ITSM, CSM, HR. The deal count for those was up over 50% just from Q1. That's rapid acceleration.
50% quarter on quarter. That's huge.
It is. It shows enterprises are really embracing this. They even landed their biggest Now Assist deal ever, over $20 million. And think about this. Those Plus products were included in 18 of their top 20 deals overall. AI is becoming integral to their largest, most strategic sales.
And are certain AI products seeing faster uptake than others? Where are customers finding that immediate value?
Yeah, the specifics are interesting. ITEM Now Assist. That's AI for managing IT assets. Its net new ACV nearly sextupled quarter on quarter, and the average deal size more than tripled. Companies are clearly seeing big savings and efficiency gains there. Now Assist for CCOPS and Risk, that combination more than doubled its net new ACV quarter on quarter. Using AI for security and risk is obviously critical right now.
Makes sense. What about the Core Plus SKUs?
Also booming. ITSM Plus and CSM Plus deal value quadrupled year over year. That shows AI is supercharging IT support and customer service. Item Plus tripled, HRSD Plus doubled. Even Creator Now Assist for building custom apps saw average deal sizes quadruple year over year. What this tells you is that these AI enhancements are delivering real, measurable productivity gains pretty much everywhere, making the platform stickier and more valuable across the board.
Their CEO, Bill McDermott, he has this very distinct vision, doesn't he? That AI work is cross-functional work, and he warns about AI agents ending up like spare parts scattered everywhere. It sounds like ServiceNow sees itself as the antidote to that potential chaos.
They absolutely do. Their whole pitch hinges on integration and orchestration. I mean, think about their platform. It's designed to connect everything. On-prem systems, cloud apps, any LLM, any data source. They aim to bring it all into one data model, which is crucial, right? Siloed data kills AI effectiveness.
Right.
Then they take that unified data and push it into their workflow layer, so insights actually lead to action. And then comes the AI layer. And this isn't just basic automation. They're talking about true AI agents executing real tasks across entire business processes. Like, think hire to retire. An AI agent could handle onboarding, provisioning, benefits, maybe even anticipating travel needs, solving small issues proactively.
Without a human needing to step in for every little thing.
Exactly. Or procure to pay, processing invoices, matching POs, flagging issues, maybe even negotiating terms. This end-to-end integrated approach is how they believe they help customers avoid that fragmented spare parts problem and the pain that comes with it.
And this AI control tower concept sounds key to managing all that. What exactly is it?
Yeah, they called it the ultimate metaphor for governing the agentic enterprise.
Yeah.
Imagine a future with these autonomous AI agents doing complex work. The control tower is meant to be the central brain. It ensures all these agents, ServiceNow's own, third-party ones, whatever the customer builds, work together properly, securely, compliantly. It's about scaling AI without losing control, which is huge for big companies.
Governance is going to be critical.
Absolutely. And they're boosting this with things like their NVIDIA partnership for the Nemotron LLM that helps the agents reason and plan faster, and their workflow data fabric that was in 17 of the top 20 deals. That shows customers get the need to combine data, analytics, and AI. RaptorDB Pro, their high-performance database, is also gaining traction, apparently. You need that kind of engine to power these data-hungry AI systems.
So it's the tech, the integration, the governance. How do they make sure customers actually get the value quickly, though? Enterprise implementations can be slow.
That's a great point. And that seems to be the focus of their Now Next AI program. It sounds like more than just marketing, they're actually deploying their own engineering teams to help customers go live fast. It shows they're confident in the immediate benefits and want to cut down that time to value, avoiding the implementation pain and getting AI working for customers like within weeks, not years. 3, the frontier of CRM, an AI-powered evolution.
Okay, let's shift gears a bit. ServiceNow is making some really bold moves in front office workflows, particularly CRM. Now, when most people think CRM, they think Salesforce, maybe Dynamics, traditional sales and service tools. But ServiceNow seems to be pushing us to rethink that model entirely, especially with this agentic AI idea.
Yeah, this is where they talk about a seismic shift. They're basically predicting that agentic AI could make traditional CRM obsolete. Maybe by the end of the decade. Their vision isn't people clicking around in CRM screens. It's systems of action driven by autonomous front-end agents. Think AI agents just embedded everywhere in your email, your chat, handling customer interactions, processing sales tasks, maybe even initiating them without you needing to log into a separate CRM system.
So AI becomes the interface, almost.
Kind of, yeah. Omnipresent AI agents embedded in everyday tools, that's the phrase they used. It's a pretty radical departure from clicking fields in a database.
So if traditional CRM is on the way out, according to them, how are they actually building this new AI-powered front office? What are the pieces?
Well, they're building out their own sales and order management solution, and a key part of that was acquiring Logic.ai. Logic.ai focuses on CPQ configuration, price, quote. That's a complex area, especially for businesses with customizable products or services. Getting quotes right quickly is crucial, and they said Logic.ai is already driving growth. They closed 9 CPQS deals just in June, before the quarter even ended. Their overall goal, they said, is a fully integrated AI-powered front office that streamlines everything from lead to cash, basically. And they seem to be getting a good reaction from customers.
It's not just talk, then. They have customers actually using this.
Mm.
Can you give us some real-world examples? It helps to visualize how this actually works.
Definitely. And the examples show the breadth. It's not just one type of company. For instance, a big U.S. building supply company chose their CPQ for configuration and quoting across their whole distribution network. Think faster, more accurate sales. ExxonMobil, they're using ServiceNow AI and agents for employee experiences and operational processes. So, internal efficiency driven by AI.
Okay, so B2B sales and internal operations.
Oh, right. Then you have Standard Chartered Bank using the AI control tower with RaptorDB for governing their AI agents. That's crucial in finance, governance, security, compliance. Merck, the pharma giant, is using the AI platform for security operations, managing assets, reducing risk, ensuring data compliance. AI as a security force multiplier.
So finance, pharma, security.
Yeah.
Very different use cases.
Exactly. Then there's the state of California using their CRM across multiple departments for constituent services. That's public sector, citizen-facing. Banco do Nordeste in Brazil is using AI to transform customer service, aiming for more tailored solutions. Intuit is using their done-for-you agentic AI experiences for their own employees, trying to automate friction points.
Even Starbucks.
Yeah, Starbucks is using AI to enhance their tech ecosystem, rolling it out in support centers to improve satisfaction, internal support leading to better external experiences potentially. North Carolina Department of Transportation is using the AI control tower for governance, again, highlighting that control aspect. There's also a really interesting partnership with Capzone Impact Investments to develop solutions for maritime manufacturing using risk management, asset management, and AI automation. That's very specific co-innovation.
Wow, maritime manufacturing, that's niche.
It is. And finally, NVIDIA, obviously a key partner, is using ServiceNow AI to redefine their own employee support with intelligent agents providing instant answers and proactive help.
Okay, these examples really do paint a picture. It's touching everything from sales configuration and security to public services and even shipbuilding. It's far beyond just fixing IT tickets.
Absolutely. It shows the platform's reach and how AI is being applied across almost every function and industry imaginable. 4V, strategic investments and future outlook.
So, amazing results, ambitious AI and CRM plans. Let's talk about the money side again. The outlook, the investments. How are they managing this balancing act, delivering now while investing heavily for this AI-driven future?
It's a key question, and Gina Mestantuono, the CFO, gave some good color on that. She talked about getting a meaningful tailwind to margin expansion from their internal use of AI. They call it Now on Now. Basically, using their own tools like Code Assist for developers to make their own operations more efficient. And they put a number on it. They expect about $100 million in headcount savings in 2025 just from these internal AI efficiencies.
100 million
Yeah.
just from using their own stuff. That's pretty significant.
Yeah.
So should we expect margins to jump because of that?
Well, interestingly, no, not necessarily in the near term. Their full-year operating margin guidance is staying stable at 30.5%. And the reason, Gina explained, is that they're deliberately leaning into investments. They're taking those savings and more and plowing it back into growth. Specifically, hiring more salespeople, more engineers, boosting R&D, grabbing top AI talent. It's a conscious choice.
So investing for growth rather than banking the savings right now.
Exactly. They see this huge AI transformation opportunity, and they want to capture it and help customers get value quickly. It's about fueling long-term, accelerating growth, not just maximizing short-term margins.
Makes sense strategically. Now, what about MoveWorks? That was a pretty big acquisition. How does that fit into the financial picture they presented?
Good question. They were clear that the guidance for Q3 and the full year 2025 doesn't include any contribution from MoveWorks yet. That deal is expected to close later this year or maybe early 2026. And they said they're being prudent with expense management to account for absorbing MoveWorks when it does close. So they're being conservative, planning ahead for the integration costs, which shows discipline around M&A.
Okay. Now, one area people were watching was the U.S. federal sector. Budgets have been tighter there. How did ServiceNow fare, and how did that factor into their outlook?
Yeah, they acknowledged the uncertainty there, saying things played out kind of as expected. Budgets are under pressure. But despite that, they said their federal team executed extremely well. They actually closed 6 new logos in the U.S. public sector in Q2, which, in a tight budget environment, suggests their value proposition around efficiency and modernization is still resonating. They reassured investors that the overall guidance reflects these federal trends appropriately.
So they're managing through it. Looking ahead then, what are the targets? Are they still aiming for those big 2026 numbers?
Confidence seems really high. They actually raised their 2025 subscription revenue guidance again by about $125 million at the midpoint. Now they're targeting $12.775 billion to $12.795 billion for the year. And Q3 guidance looks solid too. They also highlighted the pipeline strength. Their Knowledge 2025 conference alone generated over $1.2 billion in new pipeline.
$1.2 billion from one event.
Yeah, huge potential deal flow. All this momentum keeps them firmly on track for that $15 billion plus subscription revenue goal for 2026. And crucially, that includes hitting $1 billion in Now Assist ACV by then. That AI revenue target seems increasingly achievable given the adoption trends we discussed. V, the unseen edge. Culture, talent, and brand.
Okay, so the numbers are great, the tech is cutting edge, but often there's something else, right? It's sort of secret sauce behind companies that execute this consistently well. What about ServiceNow's culture, their people? How much does that play into this success?
I think it plays a huge role, and they touched on it. They often talk about this hungry and humble culture that's apparently been there since the beginning. It sounds like more than just words. It fosters this drive for continuous improvement, always focusing on the customer. They also really emphasize the strength of their product, engineering, and design teams, saying they're creating too much net new innovation to cover on one call. That constant innovation engine is vital.
And that idea of co-innovation you mentioned earlier.
Right. That seems key too. It's not just selling products off the shelf. They partner deeply with customers to solve unique problems, sometimes creating new IP together. Like that financial services example, tackling a complex AI governance issue together, developing a solution that then benefits others. That builds incredibly sticky relationships and solutions that really hit the mark.
That makes them more of a partner than just a vendor. What about the leadership, particularly in sales and marketing? There have been some changes, right? Are they confident they have the right team to execute?
They expressed very high confidence. They called their go-to-market leadership fantastic, mentioning specific leaders in Asia-Pacific, the Americas, and strong country managers elsewhere. They framed recent executive changes as strategic, bringing in proven leaders who get scale and understand the ServiceNow culture. It sounds like a deliberate effort to ensure leadership keeps pace with growth. They also highlighted Paul Phipps leading global customer operations as a field general, a real superstar. It suggests a deep bench of talent.
Okay, strong culture, strong leadership. Finally, what about the brand itself? Is ServiceNow becoming more recognized out there? Does that matter in enterprise software?
It absolutely matters, and yes, their brand recognition is growing significantly. They mentioned they're now ranked the 42nd most valuable brand globally. That's a big jump, and they attributed it partly to their marketing campaigns, including the work with Idris Elba, which aims to show AI works for people in a more human way. This increased brand equity isn't just fluff. It reflects the company's performance, its clear messaging, and its growing influence. A strong brand helps attract talent, builds trust with customers, potentially speeds up sales cycles. It's a real asset.
So putting it all together,
Oh,
an outstanding Q2, clear leadership in this agentic AI space, a bold plan to reinvent CRM, and strong strategic footing with investments, culture, and brand all aligned.
that sums it up pretty well. And maybe a final thought for you, the listener, to chew on. As we hear more about AI as the new UI, how might that really change how you interact with software day to day? How might it change how your business operates? What possibilities does this idea of an extensible AI operating system for the agentic enterprise unlock for efficiency and innovation in your world? It's definitely something to think about.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.